insurance has been also selling a lot of investment products, both whether it is in equity or in debt, whether it's guaranteed, you can call it, we confuse the public by using par, non-par, unit linked and stuff like that. But net what you're doing is you're selling some guaranteed products and non-guaranteed products. As we move, I think we will have to move towards more risk-based product. The moment we move towards risk, people will understand. Customers know what they're buying. Today, customers don't know what they're buying. This is my reading, okay, of the market. Life insurance is still sold and not bought because customer doesn't understand what he's buying. If we move our products, how many customers do not understand a motor product they're buying? They do. Do they understand a medical claim? They do. They understand a personal accident? They do. Why is it that life is so complicated? Because we've actually made so many products which are a combination of investment. If we move to where we see the developed markets moving and we say it's primarily going to be pure risk, it's going to be pensions, it's going to be annuities, everybody understands, and we will move towards technology, we will move towards majority of your sales coming through technology enabled. Now technology enabled doesn't necessarily mean website, it could also mean your next door neighbor, but it would still be enabled through technology and through an understanding. I also believe that the role of IFAs and the role of independent advisors will increase tremendously. I'm not saying it's going to happen tomorrow, but I do think in the next 5 to 10 years, we will see all of this panning out. That's the
Shamil, on the non-life side, on the distribution, brokers were non-existent in 2002 because there was no licensed broker. And brokers' market share for the last 2 years has been around 28% of the entire non-life. So from zero, they have become 28% of the entire non-life market. So they have been the fastest growing intermediary in the non-life space. The Broker Association did a study last year and did a study of the various Asian market, and we project that the brokers should move to around 40% of the entire non-life market in the next 7-8 years further. So this is based on the Asian market study. So we look at Philippines, Malaysia, Indonesia, even the neighboring countries, they have around 40% market share of the brokers. So that's the rough expectation. And on the corporate space within the non-life, the brokers would have a very large market share, maybe 80% or so. And on the retail segment, with the advent of technology, the broking is growing. And I think the broking as a channel, why they have grown, because the broker doesn't represent the sell side, they represent the buy side. I think that has really got them the market share.
Okay. Hi, good afternoon. This is Vishwanath. I work with India First Life Insurance. I have a small question for the panelist here. We talk about the penetrations of life insurance and other insurance in this Indian economy, and if you see, the penetration levels are not really have grown too much in last 15 years if you compare the first year of starting operations and now. And then we also have heard that there have been concerns about many insurance companies coming in and doing it. So I work for rural market and I look into micro insurance also. Wanted to understand, especially from Srinivasan sir, sir, don't you think it's a time that we should follow the footsteps of bank, where bank have now allowed a sectoral focus for small finance banks to come up? Because they were also facing a challenge of not being able to reach the unbanked poor and all those people in the remote sections of the society. Don't you think it's time to start thinking of having insurance companies who are similarly focused on those areas? Or probably because we are now tying up with the small finance bank and serving those clients, why can't insurance industry have focused insurance companies, or some of the existing ones have little bigger focus on those markets so that the penetration really goes up? Because we're all thinking of new market, new people to be covered, and new places where we can actually sell insurance to the customers. So
I think a great question. See, what the Indian market needs to look at is, should we have cooperatives or mutuals in the Indian insurance industry? This is something which is prevalent in some of the countries of the world. And if you look at the banking system, there are cooperative banks, there are small banks, they are much more niche, they are localized, they have better connect to the customers. Whereas the Indian insurance industry has only corporates, sitting in metropolitan cities, not really being able to get into the rural hinterland in a very significant way. So I would certainly support that cooperatives coming into the insurance industry. But only thing, we need to amend the act to bring down the capital requirements. The regulation also has to be relatively lenient. And if these companies can be made to focus on the rural market, certainly the penetration can go up. I think I would support that idea.
Taking off from what he said,
Yeah.
if we really want penetration of insurance to grow, we need to go that way, and possibly it's the PSUs, okay, who understand, the PSUs need to lead the way because they have, I would say, the width already. So LIC needs to take a different stance. Of course, I don't know if anyone from LIC is here. Take a completely different route, okay, so that you are going to what we call the bottom of the pyramid and ensuring that they get insurance. Yeah.
Ma'am,
So a totally different route,
So-
it's a comment.
see the
So let me jump to Mrs. Srinivasan's defense here. Okay, we normally fight in the market, but on this I will defend PSUs. Why should the PSUs have this responsibility? Let me ask it that way, right? If there is a market, in a sense, I mean, going back to our thinking, socialistic thinking that we've had till the 90s, there's an expectation that PSUs will take, take the burden of this challenge. Let me explain. So, I think the point that Mr. Srinivasan made is that if there is a market opportunity, there is a scope for cooperative insurance models or mutuals in that market, there could be players coming in. The way the market is structured today, none of the new companies that have come in found that to be a viable model. That's why they didn't go there, right? So if there's viability, I think there would be solutions that private sector will provide. And if there's no market solution at this point in time, forcing the PSU to go, as was done earlier by asking them to set up branches in the rural market, is actually damaging the PSUs. So if there is a market opportunity, it's not about PSUs, anyone can do it. If there's no market opportunity, why should the PSUs have, take the
So
burden?
I'm not talking about PSUs being forced to do it. I'm saying disrupt. Disrupt and use a different strategy. So I am. This is only a comment. That's it.
I'll just like
I will respond, I think. See, we are good in disrupting the market. So we have to see, 3 years back, all the 4 PSUs went on a very big expansion into the rural areas. We opened what is called as micro offices, one-man offices supported by technology. Today, we have all the 4 of us together will have about 4,000 offices in Tier 3, Tier 4 cities. What is interesting is, these offices are doing very well. I mean, they are doing good amount of premium. Their claims ratio is low, expense ratio is very little. So we, in fact, we feel that this model will work. Only thing, we don't have adequate people to get into more areas. See, what we feel is, my personal opinion is technology cannot be the front end. The human face has to be there in the Indian context at this point of time, at least for a few more years, but supported very well by technology. This is what our micro offices are doing. They can issue any policy. They can issue even a nuclear liability policy sitting in a Tier 3 city. They have the technology there. But it is a human being who is selling policies there. What we found was just opening an office in Tier 4 town led to a lot of insurance inquiries. People thought that there is a general insurance company there. So I have a two-wheeler which I never insured for the last 5 years. Let me go and insure. So we found that opportunities are increasing. See, I always feel that in India today, there is great insurance potential even as it is today. The only thing, the industry doesn't have the reach. So we need to increase our reach, and if we really get into those areas, in a cost-effective way, clearly we can do much more than what we are doing at this point of time.
The last question, please.
My name is Nalin Bhandari. My query is on consolidation. Currently, there are 2 set of companies, one promoted by BFSI group and other by non-BFSI group. So my query is whether it's really a consolidation because the market is saturated, or it is a stake sale by non-BFSI group because they want to invest, they want to realize the investment and focus on their core business. I had seen the Analjit Singh interview where he had said that we had an intention to build, operate and sell the company. So it's really a consolidation, or it is just a stake sale by non-BFSI companies?
I think you have all the, I'll just start before I leave it to other panelists. I think the motive for consolidation could be different. There could be certain promoters who would like to exit either because they don't see much of opportunities or they would like to cash it out. They see better opportunities. So the build, operate, transfer model, which you said, could be one set of promoters' point of view. But what we talked about is, there are a set of companies in this market, especially on the general insurance side, I'm not aware of life. Because there are stronger companies in this market, these second wave companies haven't really been able to build up a decent volume. And how long they can burn their capital. I mean, a situation would come where the promoters would feel that should they really be continuing to do business or should they really get themselves consolidated so that they can take out their money or find a better way of doing business. So the motives could be different, but what I feel is the need for consolidation is clearly felt in the market. It all depends how long the current promoters can hold on in the current model.
I agree with Mr. Srinivasan, and just to add to his point and to answer your question, the group that you mentioned, it's not just the life insurance company. If you are a corporate follower, you will find out that that particular group has a history of setting up companies. It's a fair enough strategy to actually reap in the rewards within a particular period of time, So it's not just their life insurance company that is doing. But having said that, it's not easy to, unless you build up a good business and the partner with whom you are merging or you are selling stake, whatever you call it, has to find value or merit in that business. So consolidation, to come to your point, would happen whenever or wherever both the parties, the party which is selling or consolidating or the party which is buying or acquiring, is actually finds value in the overall business. Otherwise, it would not happen.
But everybody is saying consolidation is the need and all that, but the largest players sitting here are saying they're not looking at any acquisition at all. So
being one of the smallest players in this panel at least, I would also like to add that even the smaller players are not really looking at merging into larger players. I think the point that Mr. Srinivasan made is very, very important to understand. And it's got nothing to do with large, small or medium-sized company. We are a medium-sized company. I think it's, are you running a profitable book? Do you have a business model which is making sense? Are you self-sufficient? And do you have plans for growth? And as long as you're self-sufficient, you're running a profitable model, you have a clear strategy in place, and you see that you're going to grow, there is no need for consolidation at all for anybody. And they're absolutely right. The bigger players, for them to take on another company, they need to know why. What is the strategic fitment in the entire thing? I mean, and I think that's best left answered, whether it's listing, whether it is stake selling. I think there are enough conjectures on why this happened, but it has to have a strategic fit.
well, the person who could have answered this question is unwell, so he couldn't come today. Okay, I think the last,
Sure.
yeah, please.
Sir, I am J. Anil Kumar. I am Chief Corporate Planning, LIC of India. So I just want to supplement what Madam has been saying. Reach of particularly PSUs to reach to the deep rural masses. I'd just like to mention what we have been doing for the past, particularly for the past 5 years, to reach to the deepest areas of India. We have opened what is called the mini offices some 3 years back, as per GOI instructions when Mr. Chidambaram was the FF. So that was a tie-up between an agent's office and our representative going there for servicing customers, attending to his calls and things like that. It's been doing very well. Another aspect which we do is to cover the masses.
Could you please ask your question? I think that will.
No, I'm just supplementing what she has said. We have the pension and group schemes where we have the social security schemes, wherein large volumes are covered. Another is we have the micro insurance separate department which looks after the micro insurance business. And finally, we are in talks for tying up with the CSCs, Common Service Centers, tying up with them for ensuring mass coverage. I was just supplementing what Madam was saying. Thank you.
Thank you. Thank you very much indeed. I would now request my colleague Sangeeta to give a vote of thanks.
Good afternoon to all of you. all good things comes to an end. So has Business Standard Insurance Roundtable 2017. I would like to thank our speakers for taking out time from your busy schedule. It has been an engaging and enlightening discussion. We thank our main sponsor, Life Insurance Corporation of India, and SBI Life Insurance for main sponsors, associate sponsor, New India Assurance, co-sponsor, India First Insurance, Godrej Properties, and MISB Bokoni for being our knowledge partner. Now I request my colleague, Mr. Sachin Fansikar, to hand over the mementos to our panelists. Thank you, Sachin. Would request all of you to join us for lunch, and thank you once again.